Alright, so I'm going to make a little recap of the ES, past, present, and what the future may bring. Well, what I'm looking at here, at the 9.3 is a special one down here. Here I have other stochastics, and as you can see, this one green wide one. We get some buying opportunities. Can start looking at selling opportunities. Kind of just cycles like here. Where's this at? It's freezing up on me a little bit. So selling buying opportunities. Yeah. And here, yeah, I just like the way these moves now that we race back through all these moving averages, just like we did here. Very bullish, just from the bottom of this cluster of moving averages, just race through, went higher, held them until we didn't. Contract changed, sat here for a minute, and then just dropped off into the reds. Like here, we bounced off the red. That was beautiful, beautiful bounce right there. And get a bounce here. Of course, whenever you get to like the reds, you get a reaction, get a nice bounce. But now you got the yellows here. So we made an inverse head and shoulders. What's gonna happen? Oh, everybody sees, okay, it's inverse head and shoulders. It's gonna go higher. Brexit's looming overhead. Everything's great. Brexit's doing good. We're chopping around in those moving averages. We push through it, and these are made by the TTM LRC. They're just automatic. I do have a special value for them, for special length. Still, in testing phases, but so far I'd say it's got these pivots pretty well figured out. Here we'll see. So now we're creeping back towards this area here where let's pull this out a little bit. There we go. Where top trend line on the falling channel. If that was the case, the potential shorting opportunity. It's also gap fill from the contract change, and so 2006 area or so. And it looks like it wants it, and it's gonna get there. It'd be a good idea to put a little short on. And here's a resistance, especially here too. So that's all lining up. This pivot here, this here, gap here, and yeah. So we'll see what happens, but I'd like to follow these lines, and instead of having to draw my own channels, I'd rather have a computer do it for me. And I also look at this at different time frames. It's a big hot mess if you would look at it. Just give it a second to load. There we go. I also have crude oil in this pile here. You can't even see the price, right? Just to get a general idea, I can always zoom in on closest time frame to the furthest time frame. This is an hourly, 30 minute, 15 minute, and then I believe this is a 7-minute actually. Here I got 15, 30, 1 hour, and daily, 1 minute, 3 minute, 5 minute. I believe this one is 7 minute. Yeah. These are the smaller time frames. These are the bigger time frames for the ES. And I just like to watch crude oil, or I could switch it to something else. Just this row here. But yeah. Let's look at the daily real quick. Yeah, see, these moving averages right here kind of being a resistance. We're also starting to roll over in some of these stochastics. The main green one here is the, yeah, I haven't made that one fat yet on this one. It's overbought. It's about to be overbought. It is overbought, actually. Daily. It's pretty obvious with the run we've had. But let's zoom in a little bit more. Yeah, we're hugging this one moving average right here. So, being holidays and stuff, I'm not expecting much of a move, but if you do make it up to the 2106 area, or I mean, 2106, looks like a good shorting opportunity for the shorter term at least, but you never know. This technical here is a downward channel according to the LRC, and the reason I have it measured out just for that length, as you can tell, it's pretty well tagging these on the daily. These tops, these bottoms have been blown through it a bit, but that's what the moving averages are for. This one here. We got the yellow ones. We tagged the yellows in January, February when we had the downfall. If I zoom out more, we got more levels below. Let's see, when the hourly tagged those reds, it made, perfect little bounce once we get to those reds. If the market keeps going sideways, this moving average is just going to keep following it up and up and up until it catches up to it. Or market wants to keep screaming higher, and eventually these moving averages will come into play. And when they come into play on the daily chart, that's why you're talking retirement investment right there. At least for the next decade, because it isn't such a big chart. If you'd able to buy 1600 right now, yeah, I'll take it. That's probably the end of the next bear market. Even these yellows are going to be good bounce zones, considering, another 1800, even low 1700s if things get really bad. But it's all speculation. We'll see. I take it day by day, but when these levels get hit, especially the red ones, they always get a reaction, even on smaller time frames. Even a 1 minute, just if you go on a 1 minute and you look at where the reds are, let's see where we're at. Oh, they're right below us. We could easily, if I see price come down to here, you'll get a reaction enough to scalp. You get a couple points out of it, whatever. On the 1 minute, if you just want to play it like that. See if I can go out a little bit further on that one. I don't know how much time I have left. It's a 15-minute video. Let's see here. I can't even zoom out anymore. I don't know, for some reason. Should be able to go further out than just the last day. Yeah, but anywho, 1 minute, 3 minutes also nice. I like using the 3 minute. Where are we at on the 3 minute here? See, once we broke through these reds, smooth sailing, just following that purple line. We've got a little toppy here. Boom, bouncing off the green ones, bouncing off the green ones. Staying with the greens for now, but once we start bouncing off the yellow ones, it doesn't matter if you're scalping. Whenever you're getting into bigger time frames, deeper colors, yellows and reds, you're talking bigger pivot points. So, anyhow, just keep an eye on it. It's July 3rd. Everybody's shooting off firecrackers. I don't know if you can hear that. But I think the charts are much more exciting than the fireworks. Anywho,